Hi, I'm Charlie Wills with your Badger Real Estate team. Welcome today. This is our April edition of our vlog, and we are in this beautiful home here in Hawks Landing. We're at 8813 Nelson Crossing. It sits on the back of the fifth hole. You couldn't have a better view from the sunroom and the stamped patio on the back side of this house. So again, I'm Charlie Wills. This is Andy Voltner. He's with Omni Financial, but also is going to be hosting here today to give you a little bit more insight on what the market's doing. So thank you for joining us.
Yeah, great. Well, thanks for having me, Charlie.
You bet.
Well, the first question I have is I've got a lot of people that I talk to in my business that are young, are looking to buy their first home, and they're having a really hard time finding one. They've maybe put in a ton of offers and things like that. Can you kind of explain what's going on with that?
Yeah, absolutely. So what's been happening in the market is that there's been a lot of downward pressure in that first-time home buyer price range where under $250,000, which is where most first-time buyers buy, there's a complete loss of most of the inventory. That's the highest purchased area in the last 2 years. And so that inventory is shrinking faster than any other inventory, and that could be probably the reason that they're falling into so many issues.
Yeah, when you say inventory, like how does that work year after year with that? Have you seen something like this happen before, or is this something that's new?
Well, right now, the amount of what's being purchased is being purchased faster than what can come available. So you're talking new construction, condominiums, along with existing homes that are on the market. So that's what's happening with our market, is that there's just not enough to compete with how many people there are out there. And that's what we're seeing, the shortage happening, or you'll hear in the market where people say, well, there's low inventory. Well, that's what it means. Not enough inventory is coming on and too many buyers. So it's that supply-demand issue that you're starting to see prices creep up, but no more inventory coming on the market.
So it seems to me that if you have a bunch of people that are trying to buy, a backlog of buyers, right? Which means you don't have enough sellers. Are people hesitant to sell their home because they don't want to go to the end of the line from a buyer's perspective?
Yeah, they do, and that's probably the most common fear that we have, is that they'll use that, like, well, I could sell and make a profit, but I really don't want to put myself in that market. What's really amazing about this market is we just had something similar. We had a client, actually in the first-time home buyer range, said, if I sell it, I'm probably going to make a lot of profit, but where am I going to go? And I said, don't worry about where. Let's control your time frame. So for them, they put their house on in April, and we said, well, let's not close until September. And the buyer was willing to do whatever they wanted, whatever the seller wanted, just so that they could get the home. So that was a nice way that gave them 4 months to go out and go search, look for the right house, and then they found the fit. And then what was really nice about this situation is that we could get the closing in sooner. So we were actually able to close everybody in July because it all worked out. So as a seller, you have not just price that you can control a lot of those little features that don't seem to be important, but in this market, closing date could be really, really important.
So I mean, personally, you wouldn't say, hey, the problem of getting a new house should be something that's preventing me right now. There are different things that you can do to kind of create a scenario as a seller that will work for you. Yep,
absolutely. So whether you're doing existing or you're looking for new construction, both readily available. The other nice thing is typically when you're moving out of like the under 250 range up to, let's say, 400 or maybe 450, that price range, depending on your neighborhoods, that's actually having more inventory available. And then you keep creeping as you get higher in price range, you're getting more inventory levels. So it's really actually kind of nice for the move up buyer. They have more options available to them.
How does the rising interest rates affect your potential buyers and sellers?
It can really affect our buyers that are in the first-time price range and then also have very little money down. That's probably the buyer that's probably most adverse to all the interest rate changes. Right now, they're really holding between 3 3/4 to 4 1/4, maybe 4 1/2 if they have bad credit. That's what we're seeing right now, but it's really kind of held. And I think we're going to probably be in that range most of the year unless something completely changes here in our markets. So I think right now, again, that lower, I say lower for this area, 250 and under, that price range can be affected by the rate changes, because you're not talking about, percentage-wise, you're talking about bigger swings in their budget. So that could really affect their monthly income if they're having to spend between $100 or $150 more a month on their house because of a rate change. So it could affect them a lot more than I would say your move-up buyers, where you're between 4, 5, or 600,000, because they usually have more cash down and they have more flexibility in their budget.
You said it's a seller's market right now because there's so many buyers. What are some of the things a buyer can do when he's competing against other buyers for a home to make his or her offer stand out?
Well, the easiest one to talk about is called acceleration clause. We use that a lot, where it says that I'm going to offer you this price, and I'm going to offer you so much more above that any other offer up to a maximum. So an example, I'll use real numbers. $200,000 is what I'm going to offer you. $2,000 more than any other offer up to a maximum of $220,000. What that does is it lets you automatically, like it's like on autopilot, it lets you automatically compete for that business without ever having to go back to the seller and re-countering. So it kind of keeps your offer fresher longer. Okay.
Right.
That's one real key area that you can do it. Price always helps, right? But other key areas, your agent should call the other agent. What is the, make sure the appliances, be absolutely sure so they don't have to counter you. What is absolutely included in your sale? Hey, does the seller have a preferred closing date? Oh, August? Cool. We'll make that happen, right? So you're just trying to ask the other agent accommodation kind of questions that if it's possible to make them, man, make your offer that way. It's a lost art in this market that most people are just emailing stuff over, and why not call? It's the easiest thing to do, I think, is pick up the phone, make a phone call, wait for that response, and then you can have a better offer presenting forward. Another thing we're asking a lot of our clients to do is remove inspection contingencies. And I'm sure when I say that, most people are listening to this video and like, why are you telling them that? Most problems we find in the market, especially in Madison, because there's so much newer inventory unless you're downtown, houses don't tend to have a lot of problems. It's mostly mechanicals. So appliances in your kitchen, or it could be your furnace or air conditioner. Well, they make home warranties for that, and it costs just as much to get a home warranty to cover your house for a full year that it does to pay for an inspection. So yes, could there be little things missed? Absolutely. But we're saying forgo the inspection, pay for a home warranty for yourself, and just have that coverage. So now the seller's like, wow, I'm not having an inspection. There's more money. And the third thing we tell them, if they can afford to do so, if you're going to go above asking, you can't have an appraisal contingency in there, because what that tends to do is say, I'm offering you more, but I have this caveat back here that if it doesn't appraise, then I want this value. Well, again, why would a seller take that in this market with so much competition? So our clients that can afford to do so, if they've got extra cash available, we tell them to forego the appraisal contingency. So those three things are really our three hottest places to make your offer more competitive than any other offer. So that's what I actually said four, but those are the areas that are really, really important right now, and win our clients their contracts over others.
That's fantastic. Yeah, no, that's really good stuff. I didn't know any of that. Let's say I bought a house 5 years ago. What is the growth rate of value of my home been over the last 5 years or so?
Yeah, 5 years. The market, 5 years ago, we were in 2012. The market just started to creep out of the recession. And so it was a pretty stagnant market still in 2012, depending on your neighborhoods. I'm talking macro, right? Like if you looked at Dane County, maybe 1% growth. Now, as you got from the near west side, like Whitney Way down to downtown, and then near east side all the way out to like Jennifer Street or Willie Street area, like Atwood maybe is probably the best like boundary for that, you were seeing 3% growth. So in Madison, typically your growth starts always downtown, and then you see it start to spread everywhere else, right? Especially where there's areas of low inventory or higher demand. So you're seeing that slow growth a year later, and then by 14, you could really start to see it ramp. And by 15, that's when it started getting back to about 3% a year in Dane County. And now we're at about between 15 and 16, it's grown 13.8% in value. And that's an amazing thing. So if you're a seller, you're not only, let's say you're making improvements to your property, but then you're also looking at market update in terms of valuations, you could grow from 13 to maybe 20% in value if you've made the right decisions on the things that you're preparing at your house. So it's a really good spot that if you have those questions, that's where you reach out to somebody like our team, and then we can provide that information for you. And then you're educated on where you stand. And that's, I think, one of the biggest things we pride ourselves on is our past clients along with our current clients, we educate tons about what the market's doing and where they are and what the prices are doing and what to expect in the future, as a whole, because we have so much good data to show them the trends in the area.
Yeah, sounds good. I mean, that's definitely one reason to work with Team Wills, right? What would be some other reasons that you think make you guys stand out?
Well, you have 6 people who are there to help you all the time. Imagine working with a single agent who only has so much bandwidth to help maybe 3 or 4 people at a time. And we're able to have 3 agents that are in our office, me being one of them, and then we have 5 other support staff. So it's an amazing group that we all are on one page. We have meetings every morning, and we're making sure that everybody knows what's happening with every client. So imagine you just talked to me, we put an offer together, we're high-fiving and screaming on the phone, right, that where you got this accepted offer, and then instantly one of my teammates picks up the phone and calls you or emails you and says, all right, cool. We know that Charlie just talked to you. Here's what your next steps are. Imagine that level of service. And that's the thing that separates us. I think the biggest is our quality of service the whole way through. And that's, I think, what separates us.
I'm assuming I would also get the Badgers schedule on a magnet at some point.
We don't send those because I know it's probably a killer marketing move that we're missing. But I feel like everybody gets inundated with schedules and magnets on their refrigerator. I think that's one of the funniest things I see is that I walk into a listing appointment and some realtor's magnets on the cabinet, and then I'm signing the listing contract. So I find that that's really really quite interesting. Yeah, one of my inside jab moments. But really, I think one of the biggest things is that service level.
Yeah, for sure, for sure. You talked a little bit about the first-time home buyer versus a 400-plus market. What are the timetables and inventory and things in those various price ranges?
Yeah, right now we're under 30 days, $250,000 and under. And that's meaning basically from the time of acceptance, which is usually within a day or 2 of it going live, to the day it closes. So it's very, very fast market. And our inventory levels are I think 1.3 months of inventory, which is a normal market. And we said this a lot in our videos, is that 6 to 8 months is very normal, and we're at 6 times under that number. So that shows you why people are so emotional and so stressed out about buying. The other price ranges, you go 250 to 400. It's an even market where there's as many buyers as there are sellers. So it's a pretty even. Now that's macro, right? That's Dane County. But if you go even by neighborhood, that could shift very quickly. We typically see that not be true between, again, Whitney Way, west, near west, all the way to the near east side on Atwood. If you're in those neighborhoods, that's not true. You could go as high as up to $800,000 and that be just as hot as it is at 250 in some areas. So that's why I think it's good to have that market knowledge. Between 400 and 600, very slow. You're having what I would call most likely a buyer's market at that 4 to 6, and then 6 to $1 million. Again, there's only, I saw between 600 and $1 million, there were only 12 sales and there's 100 listings. So if you do that math, that's 10 months of absorption rate time. So that tells you as a seller, you don't have an advantage.
Sure.
So you probably have to negotiate a little bit more.
Yeah, that makes sense. What if I want something, I don't want to mow my lawn, I don't want to have to do any of the maintenance stuff like that. What about condos? What's the story with those?
Yeah, you're hitting a really good point, Andy, about that. Condominiums are probably the hottest product that are out there. There are 0 projects downtown, none even unslated. The one that got started and it won't be finished till the end of August is the Starliner. It's just off the Capitol, off of East Washington. A beautiful, beautiful project that's going up right now. Actually, we have one client in there that bought, and that I think got fully sold out before it was even built. That's how fast the market is moving downtown. So people are buying basically ideas. And then you look other places, the really hot market is between probably 125,000 all the way to 200,000. Those are, if there are developers or people willing to sell those kind of products, they will fly off the market. We've had some, as a team, some taste of that because we just got asked to do a development in Fitchburg with a developer, and we haven't even listed them live, and we had 1 sell, pre-market. That's how fast the market's going to go. So those are your advantages. If you're a condo owner, it's a really great place to be as a condo owner right now. Townhouses, which are 2 to 3 story buildings. You have garden styles, which are all 1 level, and then you have duplex styles, and then single families. So you have lots of different styles, but condominiums are on fire right now.
Especially from a selling perspective, but if you want to buy a condominium, now's the time to get creative and get in there.
Yeah, if you can get in, there's plenty of great financing available, and so you're paying maybe for that same 800 or 900 square feet, you're paying $1,300 to $1,400 a month in rent in Madison, but you could own it for $700 or $800 a month. So you could cut your payment in half, and there's as little as 10% down programs, which is what, 12,000 bucks that you have to bring to the table. So
that's a great turnaround for condos, right? Because back they were stressed for a while there.
A really long time. They probably just started to make their bounce this year, where houses has been hot since 15. So that shows you that they were behind for a little while. But yeah, I think they'll be hot for years to come because the inventory can't catch up that fast.
Sure, that's great.
Thank you, Andy, for being here today and doing the interview with me. I really appreciate it.
No problem.
Thank you, too, for joining us. We'll be back in June with the May report at one of our other properties. Please contact us below. The website will have our video and then also all of our contact information. So please call us, email us, or connect with us on social media. We'd love to hear from you, and any of the questions that you have, we'd love to answer them for you. So thanks again, and we look forward to seeing you next time.